What's up guys, just doing a quick video and breakdown of my portfolio. For this I'm doing it on Stock Events, which is a quite nifty app. I found it on the Google Play Store. It is a subscription base, so you have to do a monthly subscription to access a full list or full watch list. Otherwise you can only do one company at a time per watch list. So let's get to it. All my companies and all my equities I have purchased on Easy Equities. I use this mainly for the tracking of dividends and up and coming news and events. So if we take a look at my portfolio, you can see we are quite heavily invested into ETFs, around 60%. The goal would be to remain around 60 to 40% in ETFs and dividend yielding ETFs. I'm not too keen on growth ETFs at the moment. Growth ETFs for me, I just see more value in getting a dividend and dividend tracking. For me, I want to retire one day with passive income, and the amount I am investing at the moment I don't think constitutes for ETFs based on growth. So if we take a look at the ETFs, it's mainly Satrix for the local or South African portfolio, JSE top 40 property, government bonds, a dividend one, and then the S&P 500, which is a non-dividend ETF. Then for the American counterpart, we do have the Spider, we do have JP Morgan Equity, Swap, and then a Global X Super Dividend. This is mainly for tracking the market and to be a non-active investor. The active investor part is with Spear, Realty Income, First Rand, Hype, Prop, and various other companies. The reason why I want to do a 40-60, maybe a 55-45 split, I want 40 to 60% of all my money being managed, around 40% being actively managed by myself. I mean, investing is a hard game as it is, so I want majority of my holdings being managed for me in ETFs, which have a strong probability of going up and paying dividends. But the companies I see value in as of now is Spear, Realty Income, First Rand, Hype, Prop Investments, Toyota, Vodacom, McDonald's, Coca-Cola, Pick n Pay, Richmond, Altron, and Visa. At the moment now, the majority of the companies are paying dividends, which is the end goal for me. If we take a look at our dividends, I am yielding about $1,230 per year at the moment. Next month seems to be a good month, around $333 expected, which is quite nice. We head to the analytics. We see I average about a 5.63% yield and a 2.33% dividend growth for those last 5 years or so. The end goal would be to get that dividend growth yield above 3.5, close to 4.5. So for me, that will be the need to invest in companies with a strong history of actually increasing the dividends. For example, McDonald's and Coca-Cola and First Rand as well. So if we take a look at the analytics, just go back there, we see the majority of the income I'm making is coming from ETFs, with odd one being Spear. Spear at the moment, they are quite nice with a 9.56% dividend yield. For this last 3 years or so, they've been averaging 8% growth. At the moment, their financials seems to be a bit up and down, but just based on the total South African economy with the interest rates on the rise, property investing companies will take a bit of a turn to the downside, with their margins being negatively affected. But that's the reason why I want to get in now, because as soon as the interest rates go back to where they usually were, about 5 to 7%, that will only have a positive impact on the operating margin and net income of these companies. Yesterday I did make a video regarding my views on McDonald's. At the moment now, I'm only getting about $8 per year on McDonald's. They only have a 2.63% dividend yield, but if we take a look at their 5-year average, they average about a 7.15% growth in dividend yield, which is phenomenal, and that will definitely bring up my average dividend growth. So the goal would be investing in companies with a history of actually increasing their dividends, and keeping my exposure to companies that are a lot more volatile to a minimum. So the cool thing about this app is if you go to your holdings and you type in your data, so let me just go back to the dividends and I can show you. So currently we're averaging a 2.3% dividend growth yield and a 5.63% yield. If we jot that info into our goal or our values, and the reason I'm gonna go back to that now, so on average the company should grow about the amount the dividends are. Not all companies do. Some companies grow a lot more, but on average, if the income and the net profit increases by, let's say, 10%, the dividend will increase about 10%, and that also equates to the market cap increasing about 10% as well. Not always, just in some cases, but it's a good rule of thumb. If the company is increasing the EPS with about 10%, most probably if the PE stays the same, the price will increase with about 10%. So if we take our goals over there and we jot in all of that information, we can see that in the next 10 years or so, if I only contribute around 53,000 per year, my dividend income will grow from around 1,230 to about 41,000, which is quite phenomenal growth. And then if we go on even further, that will equate to about $183,000 a year in dividend or passive income. Going back to our holdings, we'll see we take the same data, we jot that in about 10 years with 53,000 Rand contribution per year. That will equate to about 803,000 Rand for this portfolio, and for our 25-year projection, it's around 3 million. So like I said, it's quite a nifty app, quite a nice app for all your investing necessities with an up-and-coming calendar. Expected returns on the dividends, and then just in general nice news updates that will be affecting your portfolio in general. So yeah guys, I'm going to be doing more videos regarding my portfolio and the tracking of it, just to share the journey of actually increasing the portfolio and what I learn along the way. So if you do enjoy this, I would really appreciate a like, I would really appreciate a subscribe, and then I'll see you on the next one. Have a good one.